So are they going to have to rewrite your economics books? So for months, we've seen this big kind of craziness going on in the financial markets globally and a bunch of stress in the world economy. And you might think that these are like the normal signs of like an old-fashioned bear market, right, in a coming recession. But what we're seeing is kind of the emergence of a whole new setup in the world economy. And this is a shift that's going to be a pretty big change, kind of going back in time to what happened maybe after the Second World War or after the wall fell down between and the Soviet Union kind of collapsed. So this holds the promise that the rich world can escape this low-income growth trap that we saw back in the 2010s. And we start to fight these big changes, kind of like how do you deal with aging? How do you deal with climate change, right? And it's going to have a bunch of like problems too that we have to think about, like financial chaos and broken central banks. Just look at England right now. You got to control public spending. You got craziness in the markets that we haven't seen in a long time. And we're seeing global inflation that's at like double digits. We haven't seen that in like 40 years in the world, right? Even our Federal Reserve is kind of rushing right now to raise interest rates to kind of catch up with the inflation. So we're seeing the highest interest rates since the 1980s. So the dollar's at this really high point, and that's causing chaos outside of America. So if you've got investments right now, things are really kind of pretty crazy. Global shares have fallen by like 25%, and it's definitely kind of uncomfortable. So you've got like 40 trillion, more than that, in losses so far. And we're entering we're entering a winter where like Russia's invading Ukraine. So we have a bunch of big changes that we're going to see, and it's not going to be as calm as it was in the 2010s. So you had the global financial crisis from 2007 to 2009, and then the performance of rich economies, it was like kind of weak, right? If you look at it, it was really pretty bad. Investment by private firms wasn't that good. They were making big profits, but they didn't reinvest a whole lot. Governments didn't really pick up the slack to spend money. So the public capital stock all around the world shrank as a share of gross domestic product, all the money that we made. That economic growth that we saw was really kind of sluggish, and inflation was low. So you had the private and the public sectors, they weren't doing a lot to stimulate economic activity. So central banks were the only game in town. They were holding their interest rates at really low, rock bottom levels, and they bought huge volumes of bonds whenever there was any trouble. And they extended their reach really far into the economy. So now on the eve of the pandemic, these central banks, they had something like $15 trillion in financial assets. This was a big challenge at the start of the pandemic. And then they took extraordinary actions to kind of that actually caused like, well, today's inflation. People are going to argue about it, but you had wild government stimulus, you had bailouts, you had like skewed patterns of consumption from consumer demand, and you had like lockdown-induced supply chain problems. People couldn't buy stuff, right? So this inflationary impulse has been turbocharged by Russia, who's kind of really screwing with the energy markets. And Saudi Arabia, they're not exporting as much fossil fuels as you would normally expect, and it's starting to isolate itself from markets in the West. So now you have like serious inflation problems. The Fed, I think they've raised rates from 0.25% to what, 3.25% high? I don't know, right? And they're going to raise them to like 4.5%. It just means like stuff slows down. So monetary authorities all around the world, y'all got to kind of tighten up from this. So what do you think comes next? I'll talk about it in another video. I gotta go work out at the gym.